Hi there, welcome to Kneppy Invest and welcome to March 10, 2025. The market closed about 15 minutes ago. This is going to be a fairly quick video because I don't have much time on my hands. So what I'm going to do in today's video is I'll quickly go through the ASX today, look in the best and worst performing sectors, indices and also companies, and then I'll do the top 5 stocks of the day, including a company that is not listed on the ASX. And that company is the stock of the day because the share price of this company was down about 7% on Friday's Wall Street session. Fairly big company, a company you will all know. I would find it hard to believe that someone out there listening to this particular video has not heard of this company. And then, if I have time, I will look or answer or comment upon one of your comments at the end of the video. Okay, and then, actually not then, before I do all that, I'll just give a bit of an update to the situation in Brisbane and where I live. So the worst conditions as Alfie made landfall, was it Saturday? Sometime Saturday. The worst conditions where I live were funnily enough well after Alfie made landfall, Saturday night into Sunday morning. That's when the wind was strongest, and that's when the rain really started to come down hard. In fact, it rained really hard from sometime Saturday night, Sunday morning into this morning. The rain is starting to ease, but we've had about 500 to 600 millimeters of rain, lots of flooding, plenty of flooding, and probably the thing I'm most thankful about did not lose power apart from one 30-second period. And the reason I'm very thankful about that is because losing power for long periods of time is absolutely awful. And there have been pockets in the Brisbane area that had lost power about 2 days ago and still without power. So that was a big fear that we might be without power for numerous days, but thankfully only for 30 seconds. A little bit of damage. One of our fences is leaning over, so that needs to be fixed. We already knew there was a bit of weakness on that part of the fence. So the wind did blow that down a little bit, not completely down, but it's leaning over. And also I have a sail over carport out the front. The previous owners put that sail in because they had a boat and they just wanted to protect the boat for some reason. That sail was starting to rip, and Alfie ripped it a little bit more on Saturday night or Sunday morning. So it looks like it's coming to an end. Probably see the sun tomorrow, which whenever you've been without sun for a few days, when you do have that sunshine, it feels absolutely amazing. Okay, now on to the ASX today. A disappointing day. I'm going to have to admit that. Fairly disappointing day. I expected a little bit better, but I think because we have such negative sentiment, and I think saying such negative sentiment, but I do think because we do have a bit of wariness in the market, even when we might have a good day, the day isn't as good as what you might expect. So only up 0.18% was the XJO. However, in saying that, Resources had a pretty good day. And if we have a look at the XAO and XJO, going sideways all through the day. In fact, even though I wasn't paying close attention to the markets today, I was looking at how the XJO was going every, say, hour. And it seems like it was at the same point every single hour. And this particular chart on market index sort of supports that. XAO and XJO just went sideways all day, so no volatility. Unlike the XTX, there was a little bit of volatility in the all technology indices. Okay, best performing sector today, energy. So that could be coal. Don't think it's uranium. Uranium's still going down. So probably coal, maybe a bit of oil, gas, that sort of thing. But up 1.5%. And the other thing is, I'm pretty sure energy has been weak. Yeah, energy has been the worst performing sector in the past week, down 6.1%. So this could be just a little bit of rebound. And if you have a look at the last week, the only sector up has been materials. Every other sector down by over 1%. In fact, 4 sectors down by over 4%. Although utilities is down 3.94%, that's close enough to 4%. Other sectors that done well today, materials, utilities, I suppose real estate, and healthcare and telecommunications down by over 0.5%. Okay, we can move on. Financials down slightly. So banks probably not the best day yet, only down 0.29%. So continuing weakness in the banks. Gold's had a really good day, up 1.36%. I did notice that, I have 4 companies in my self-wealth account, and those 4 companies are Fiducian, West African Resources, which is gold, what's the other one? Neuron Pharmaceuticals, and one more. and I noticed that portfolio was up a fair bit. So I thought I was thinking maybe it was West African. I'm just thinking that right now. I'm gonna have a look at West African. Yeah, 1.36. What about Fiducian? No. I think Fiducian was up a fair bit. What's the other one? Nurin. That's down. Okay, so that was earlier day. So obviously it's not up a lot right now. Anyway, so you can just see, just because something was up early in the day doesn't mean it's going to be up later in the day. The day is the trading day is 6 hours long. Anyway, so gold's had a pretty good day. Resources, small caps. Yeah, in fact, small caps didn't have a good day, only up 0.3%, and banks pretty negative. In fact, the ASX 20 flat, we'll say that's flat. And if we have a look at the ASX 20, in fact, yeah, it was oscillating between being up and being down all through the day, and 11 companies down, 9 up. And if we have a look at this ASX 20 list by markup, yeah, you can see CBA down 0.48%, CSL down, NAB down, Westpac down. So definitely weakness among the banks, and BHP 0.82% up. So you could say, yeah, it depends on your portfolio, how you've done today. If you're heavily invested in mining companies, you've done pretty well. Okay, so on to the top gainers. Okay. Coming in number 1 by percentage change is Wide Open Agriculture, which is a company in my top 5. So we can leave that. Resolution Minerals made an acquisition. I actually did see this one. So we'll talk about Resolution Mining because it's not in my top 5. But they made an acquisition, share price up 56%. Share price is fairly low at 1.4 cents. So looks like they have acquired an antimony and antimony gold projects. They've also, looks like they might have to do a capital raising, but yeah, antimony and gold investor presentation. Seems like the market has liked this. So let's have a look at the chart for Resolution. It sounds too much like Resolute. Resolution Minerals. How does the chart look? Oh, this is the weekly chart. Ooh, does not look good. Yeah, no interest in this at all. Now, one of the main reasons I have no interest in this at all, even though a really good volume, share price has been a downtrend for quite a while. So you're going to see a lot of selling pressure. You can see that today, that selling pressure today. Share price has gone from 2 cents down to 1.4 cents, and share price is just above 1 cent. Now, I'm trying to stay away from companies whose share price is so low just because of people trading. Okay, so let's move on to the next company. Harris Technology. I'll discuss this one briefly as well. I saw this one. This is a, what do you call it? Why did they get rid of Costco? I've just given away the stock of the day, by the way. Costco. Oh no, that's not the one. I can go back to Costco in a second. What was I talking about? Oh, that's right. Harris Technology. This is an online technology company, I suppose. They sell technology stuff online. Not that successful and fairly small. However, they did a private placement of shares this morning. And I saw this, and typically I won't have a look at these sort of announcements, private placement of shares. Well, placement of shares, but I saw private placement of shares. I thought, I wonder what this is going to be like. And then I opened it up, and then I saw this private placement was done at 2 cents. And I was thinking, yeah, raising 1.494 million at 2 cents. To a Taiwan-based technology company called FSB Technology. And I was thinking 2 cents, but wait, the share price is like 1 cent. Yes, this particular private placement was done at a 100% premium to the share price. So obviously this Taiwan technology business finds some value in Harris Technology, and for some reason they are willing to pay 100% premium. So that's why the share price is up 50%. Yeah, so there you go. Sometimes placements can be done at a premium. Anyway, onto the chart for Harris Technology, no interest. Although we have seen a bit of an increase in volume for the past, say, 8 or 9 months. And the last time we saw the share price, the last 2 times we've seen the share price rally, share price pull back almost immediately. So we can't see that again with Harris Technology. However, in saying that, share price has been going sideways for a while. So that's what we like to see. So I'm not sure if I put this onto my watch lists. This company does release Appendix 4Cs, and I'll be honest with you, every single time I look at the Appendix 4C for this company, I move on to the next one. For instance, if we look at the most recent Appendix 4C, is there anything to like here? And I think the answer to that is, well, they were operating cash flow positive by a very small amount. But the margins in this type of company is going to be quite slim. But they were operating cash flow positive in this one quarter, not for the first 6 months, however. Now, if they can turn that around, increase their margins, become more operating cash flow, free cash flow positive, this company could be interesting because they have a market cap of only $4.5 million. Anything else here? No. Fairly low volume. Lavoto Resource up 13.97% on pretty good turnover, and that company does have a fairly large markup. So let's just have a look at a quick chart for Lavoto. And chart doesn't look that bad. Maybe this is bouncing off the low. So it's bouncing off the low potentially. Now onto the top gainers by market cap. Anything I want to discuss here? So Nuix, Catapult, no. Droneshield, another pretty good day. Could this be because a little bit more drama in the world, a little bit more risk of wars, that sort of thing? Droneshield chart is looking a little bit better as well. And this was starting to look better a few days ago. And yeah, I'm not sure if I'm willing to trade this one just yet, but definitely looking better. And with the share price getting above about 90 cents, that's a pretty good move. And the share price, by the way, is at least a 3-month high. So yeah, it is starting to look much better. Droneshield. That's it. That's what I'm going to talk about when it comes to the top gainers today. On to the top losers. Anatara Lifesciences, one of the top 5 stocks of the day. Its share price down 71.8%. We'll talk about that later. Johns Lyng Group down 12.5%, more than likely because maybe there's less damage because of Alfie than expected or hoped for, and that's why John Lyng Group is down. If there was a massive amount of damage, I think John Lyng Group share price probably would have been up. Anyway, that's all she wrote. Let's have a look at top losers by market cap. See if we can find something here. And the answer to that is no. Bitcoin. I noticed a few Bitcoin ETFs among the top losers. So obviously Bitcoin's had a pretty bad day or so. And we can confirm that. Bitcoin, ooh, it's touched 80,000. Although it has touched 80,000 a couple of times the last 2 weeks. But definitely the Bitcoin chart is looking much weaker. In fact, if I was trading this, I'd be out. If I was trading it, I would be out. And that's it. It's not surprising Digital X is down because that's some sort of cryptocurrency ASX company. Don't know what they do. Okay, so let's move on to the top 5 stocks of the day. Let's do this. Coming in number 5, we have a company called Vinyl. This used to be called Jackstar a few years ago. A really small company. I had a look at it. Look, they had something like they released a subscription service to who? I have no idea who. And then maybe some new management came in, or maybe the previous management, not the previous management, but the management started to have some really significant growth thoughts or something, and they went, oh, we can really expand this business. And then Vinyl Group, used to be called Jackstar, went on a massive acquisition binge. Just were acquiring left, right, and center. And I think they're still acquiring stuff. There we go. Vinyl Group completes acquisition of Concrete Playground. Vinyl Group launches publishing house Vinyl Media. So this has something to do with music. I don't know exactly what. Couple raisings because a lot of acquisitions. Vinyl Group to acquire Concrete Playground. Oh, that's the previous one. If we go back 1 year, lots of acquisitions. Vinyl Song Trader ad network deal, launch of vinyl.com in the United Kingdom. I can't tell you what this company does, but here we go. They've even released an acquisition strategy presentation back in September of last year. Vinyl Group to acquire Funkfield. Vinyl Group acquires Web3 platform Serenade. Vinyl Group completes acquisition of Media Week. There you go. So now, if we have a look at the most recent Appendix 4C, where is it? Here. This is where it might become interesting for me. Now, I do get a little bit, I wouldn't say nervous, when a company goes on an acquisition spree because, well, I said that wrong. I would get a little bit wary of a company that goes through an acquisition spree because all it takes is one of those acquisitions to go badly, and that could hurt the company overall. Now, research has been done on this. The smaller a company is, the better the chance that an acquisition might be beneficial for shareholders. A bigger company is, the less likely an acquisition is going to be beneficial for shareholders. Research has been done on this. Acquisitions don't always help shareholders. So I think sometimes management of a company can be very motivated. Maybe they're very ambitious to grow a company, and they do get these ideas in their head that they need to acquire for growth. And a lot of times it doesn't work out. Just remember Slater and Gordon. They made an acquisition to move into UK. Absolutely disastrous. Okay, so receipts and customers, 5.3 million in the last quarter. Still operating cash flow positive and free cash flow negative. Operating cash flow negative and also free cash flow negative. Operating cash flow negative by 1.6 million. So this company is not really drawing me in just yet, but the chart had been looking good. But it's been going sideways for about almost a year. Now, what happened today? You can see the whole reason this is in the top 5 stocks of the day isn't because the company released anything. It's because the trading today. Massive volume came in today, 6 million shares traded, and it was really volatile. And I can almost guarantee you, if you have a look at the summary course of sales trading, I think there would have been some day traders who just saw the increase in volatility and they started buying this. And it really started just on open because the share price yesterday or on Friday closed at 9.6, and on open this morning, share price was 10.5. So almost immediately, share price was up 10%, but it was on fairly low volume. And then at 10:11 a.m., 2 minutes after open, when the shares in this company started trading, there was a 2 million volume trade worth $205,000. That was at where the share price was. And then at about 10:27 a.m., someone bought on market. And you can see a lot of shares bought on market at 10:27.55. And because they bought on market, share price went from 10.5 cents and went up to 12 cents. One trade, that's all it took for the share price to rise another 10%. And I think that would have triggered some day traders thingies, whatever they do. And we started seeing a lot of buying come in just after that trade. Within 6 seconds, we started seeing buying coming in. In fact, 6 seconds later, we had one trade that pushed the share price up another 10%. And we saw a lot of volatility after. A lot of buying coming in. You can just see a lot of trading between 10:27 a.m. and probably about 11 o'clock. And I'd say the trading finally started to slow down. And you can just see that if we just have a look at we'll say the 5-minute chart. Yeah, there it is, the volume. The volume was in that first hour or so. Really big volume, pushed the share price up from below 10 cents up to a high of 14.5 cents. And then because the share price rallied so much, I think some shareholders saw the opportunity to get out, take some profits, and that's why the share price fell from 14.5 and closed at 10.5 cents. And you can just see that by the daily, the one-day candlestick. It's a fairly actually negative one-day candlestick. So the share price actually opened and closed at the same price, but in the meantime, the share price went as high as 14.5 cents. So the body is at the low at the day. So that's where the main body is, at the low of the day. Anyway, so interesting trading today with Vinyl Group, and it just shows you how boring today was, that this is the number 5 stock of the day. Anyway, on to company coming in. Number 4, we have Wide Open Agriculture. Share price up 63.64%. Now, this is a small company. Share price is 1.8 cents, and the market cap, I'd be surprised if it's $20 million. $9.61 million. That's after the rise in share price of 63%. Now, they announced today that they have sold some of their lupin, lupin protein, plant-based protein or something like that. So they secured new sales in Europe, Latin America, and Australia. I don't know much about this lupin, if that's what it's called. Probably saying it wrong. Yeah, it's lupin. They strengthening sales momentum with initial commercial sales and purchase orders of over 5 metric tons. Yes, 5 metric tons of lupin protein isolate over 5 different continents. Actually, does sound quite impressive. I'll give you that. Not sure how much money they're going to get from that. So we're talking about purchase order from Tarwi, not where I grew up. This is Tarwi, a leading lupin-focused health food company. someone in Mexico, Latin America, focus on Argentina and Chile, and also a purchase order from an Australian food manufacturer. So obviously, this lupin protein isolate goes into food and drinks. It's plant-based. Lupin is sort of a bean, I think. Pretty sure it's like a bean. I could be wrong with that. Lupin, well, it's also a movie or show. There you go. Lupin bean? Yeah, lupin beans, also known as lupini beans, are a type of legume similar to peas, lentils, and peanuts that are traditionally eaten as a pickled snack, especially in Mediterranean, North Africa, and Latin America. You can understand why now Latin America is interested in wide open agriculture. Now, there's no numbers with this. That's the next thing. I want to see numbers. And the last thing I'm going to show you is the most recent company's Appendix 4C. Is this a company that could draw my interest in just by looking at the Appendix 4C? That would be the most important thing. So if we have a look at the most recent cash flow, so receipts of 170,000, nah, straight away no, and operating cash flow negative by 1.236 million. Now, nice announcement, but they haven't reached that point where I would be, well, my interest is piqued by just looking at the most recent Appendix 4C. Now let's have a look at the chart for wide open agriculture. And chart started, something really bad happened to this company not that long ago. 9th of May 2024, share price dropped 65%. I'm not going to research that, but something happened really good not that long ago. 25th of February 2025, share price popped up 140%. Can't remember what happened on that day. Chinese market approval for wide open agriculture's lupin protein isolate. There you go. Again, lupin protein isolate. So it seems like this is something that is gaining momentum for this company. And the share price is starting to increase. It was 5 or 0.5 cents before these announcements. Now it's up to 1.8 cents. And just by the chart, we'll be breaking out. So the chart actually does look interesting. Company itself, not so just yet. But really good volume came through, by the way. Really good volume. Coming in number 3, we have St. Barbara Limited. I can't remember a time where I have been impressed by a St. Barbara announcement. This company completely and continually disappoints with announcements. So they released a second half financial year 25 production and cost guidance update. It sort of sounded okay to begin with. So they have these December half year actual numbers, and the half year to the June 2025 half year guidance was much greater than the previous half year, and their revised guidance for June 2025 looks okay, but this was towards the bottom of their previous guidance range. In fact, they mentioned here, we are pleased, this is the Managing Director and CEO, Andrew Stralin, we are pleased with the progressive improvements made over the last couple of months, which are anticipated to translate into improved half year or June 2025 half year, with gold production expected to be between 32,500 and 42,500 ounces, which is a large range, by the way. That's a really large range. And ASIC coming down to between 3,400 and 3,800. That's still way higher than what you would want. However, and whenever you see the word however, you know something's bad is going to follow. Unless what they said previous was bad, and then whatever follows is going to be good. However, we were already trending to the low end of guidance after the December 2024 half year, and therefore this lower average mine grade outlook will now leave us short of achieving our previous annual guidance. And so this revision has been necessary. So this is a downgrade. This is a downgrade by that wording. And that's why the share price is down 4.35%. So it could be down more, but with gold having a good day, that has sort of helped St. Barbara. Now let's have a look at the chart for St. Barbara. And this is not a good looking chart. Yeah, this has never, well, that's wrong. I was going to say this has never looked like a good looking chart, but it hasn't looked good for the last few years. But you can see the share price, if you have a look at the weekly chart for St. Barbara, this goes back to 2001. Look at that. This does go on runs on occasion. Share price did reach a high of about $2.35 back in 2019 and has dropped all the way down to 22 cents. So definitely not the sort of company you want to own for the long term. But if you can get it really cheap, Now, I would say back in 2014, if I remember correctly, there were doubts about the ongoing, whatever you call that, the future of this company, and that's why the share price got so low. But because they did turn things around, the share price went from about 10 cents all the way up to $2.30 over a short period of time. We're saying 4 years. That's a nice little return over that period of time. But no interest in this company at all for me because they continually disappoint. And the chart doesn't look that good either. So that's saying blah, blah. Coming in at number 2, we have a company whose share price dropped a lot. Anatara Lifesciences. Share price down 72% to 1.1 cents. On phase 2 GARP IBS, which is irritable bowel syndrome, trial and anti-obesity project update. Now, the reason why the share price is down 71% is because of this little sentence. Where is it? In the third bullet point, they mentioned pausing a trial and that sort of thing in the previous bullet point, but the reason why the share price is down a fair bit is found in that little bullet point. The company's expectation and guidance from a preliminary view of non-finalized data of stage 2 is that the primary efficacy endpoint for IBS SSS reduction versus placebo is unlikely to be met. Unlikely to be met. Not good news, hence the selling. And that's all she wrote for this company. Although they do talk about anti-obesity project, my studies to commence. That could be good. Anyway, so share price down a fair bit. And this happens on occasion with these sort of companies. So you have to be aware that these sort of companies, you might see this happen. And yeah, I think some investors don't realize that. They get too caught up in the story. And then when this happens, they can be devastated. In fact, I have, on occasion, haven't done this recently, but in the past, when a company releases this sort of announcement, share price down 80%, I go to Hot Copper and just look at some of the comments, and quite often you'll see "this has destroyed me" sort of comment. I've lost all my money because of this, and my first thoughts will always be, well, why would you put all your money into a story stock? It's just insanity, and that's why some people believe that you're a mug if you invest in the stock market because they know a friend or maybe it happened to themselves. They lost all their money. In fact, our colleague at work told me exactly that. I had a friend who lost all their money in the stock market. I would never put my money there. And I was like, well, they probably put it into the story stock and it went bankrupt or something like that. Anyway, this is a chart for Anatara. Of course, we knew this was going to look negative, and it does. It does look pretty negative. Share price was at 7 cents not that long ago, in September of last year, so it's dropped from 7 cents to 1 cent in a pretty quick period of time, or short period of time, we'll say. Okay, on to the stock of the day, which is Costco. Costco release, what was it? It was their, I had the Costco investor relations up, and in fact, for those who don't know this, for a lot of American companies, if not all American companies, and this is also true for Australian companies, all you have to do is put Costco Investor Relations and it takes you straight to an Investor Relations page. And you can have a look at events and presentations. So they just released their second quarter financial year 25 thingy. And you can have a look at this. So just how they performed. Now, they missed expectations. Earnings per share was a little bit lower than expected. And thus, the share price of Costco dropped. Was it 6%? I think it was 6%. Yeah, it dropped 5.97%. Now, if you have a look at this chart, it's a pretty nice looking chart. We'll have a look at the chart again in a second, looking at the weekly chart, because what I'm going to do now is I won't have a look at their results. It's growth, a little bit of growth. What I'm going to do now is try to determine whether I could call this company high quality or not. So let's have a look at Costco FinChat page. Now, this company is fairly big, market cap of $428 billion, $428 billion. They are expanding around the world. We do have Costco in Australia, without doubt. There's one about 30 kilometers up the road from me. Now, my biggest problem, well, it's not a big problem. My first slight problem with Costco is their margins. In fact, I would say the moat that Costco has versus their competitors is their margins. They exist on pretty low margins, and they're very successful on their fairly low margins. So gross margins at 12.7%, operating margins at 3.7%, and net margins at 2.9%. And one of my criteria for a high quality company is high margins. So I've been grappling for a long time in whether or not to call Costco high quality. I probably would just because I think that is their mode. They exist on fairly low margins, and they do have a unique business model that is, if you look at all the supermarkets out there, it's fairly unique, like a membership business model. Return on equity, return on invested capital, that's high enough. We're talking about 29.5% for return on equity. This is a 5-year average, and return on invested capital at 15.5%. That's fair enough. Valuation. Okay, this is not about the quality. This is just about the valuation. Oh, by the way, the other thing I do look at when it comes to quality of a company, so look at return on equity, return on invested capital, margins. Also look at growth. I don't want a company, I cannot call a company quality if it's not growing. So I need to see revenue, earnings per share growth. I don't need to see dividend per share growth. That's sort of like an added benefit, but I don't need to see that. I just want to see revenue growth. And it's interesting for Costco, their revenue growth has been below 10% per year over the last 10 years, 8.6%. For this size company, that's okay. I don't mind that. Earnings per share growth over the last 10 years at 12.9%, suggesting the margins in this company actually have increased over the past 10 years. Dividend per share growth, 5%. Who cares? Dividend yield is 0.5%. You're not buying this company because of the dividend. Now onto valuation. This is where I have a problem with this company. P ratio 56.3. EV to gross profit 12.6. Price to free cash flow 61.8. EV to EBITDA 35. I can't justify buying Costco at these sort of valuations. In fact, I had a look. Here we go. I had a look at the P ratio history of this company. Just take your time, FinChat. I had a look at the P ratio of this company. Now, this is a fairly blunt tool to use, but I do like looking at the P ratio of a company now compared to historical levels. And between 2015 and about 2019, we'll say COVID-19, this company exists on a P ratio between 25 and 35. It was in that zone that whole period. And then it started to rise, which is telling me and telling us that the market is more and more willing to pay a premium for this company. And right now it's at or just above 55. So it's between 55 and 60, which is all-time highs. And you can see the rise in the P ratio since about early 2023 from about 35 up to these levels. So the market is paying a more and more premium for this company, which should suggest there is a possibility of increased growth in this company, which I'm not sure I can see. Now, in saying that, I did go to this Barron's article. Costco's stock is tumbling. What Wall Street says after an earnings miss. I just want to see some bull cases, some bear cases. And I've just highlighted this. I'll just zoom in here. So apparently, Barron's made the case for selling the stock in December, arguing that shares are overvalued, given the company's projected earnings growth, 10% in the next financial year, over the next couple of years. The stock has a P ratio of 53.7, and analysts expect yearly earnings per share growth to grow by 10% next financial year. So that does suggest there is a bit of overvaluation when it comes to this company. On the flip side, bulls see more upside ahead as a company implements new initiatives to keep improving its model, some of which management talked about on its call Thursday. These include testing out longer hours for its gas stations and expanding its in-house advertising network. Profitability also get a boost this year from Costco's revamped efforts to tamp down on membership sharing, something that Netflix did a few years ago. And that did help Netflix, by the way, as well as increases in annual membership pricing. And that is something they can do because of their business model, increase membership pricing. So interesting that there are some bulls who do actually see value in Costco at these sort of levels. In fact, in this article, some bull mentioned that this little pullback could be an opportunity. Here it is. Should there be any pullback in the stock price, this could provide a better entry point for investors to own such a high quality compounder. So that's maybe suggesting share price could pull back a little bit further. But there was someone who also mentioned with this particular pullback, this is an opportunity for investors to buy this high quality company. And back to the chart. So nice looking daily chart. So what I like to do is have a look at the weekly chart and just put in the 200-week moving average. And what you notice by here, this is the chart of a high quality company. So it looks like they listed in 2016. This is a chart of a high quality company. From the bottom left to the top right, share price has consistently remained above the 200-week moving average. And in fact, the 100-week moving average acts as a really nice support level. So the reason I use 200-week moving average is because of Charlie Munger, who once said, if you just buy high quality companies at the 200-week moving average, you are going to significantly beat the overall market. Now, for Costco, it looks like the 100-week moving average is the time to buy. So we have seen that on occasion. In fact, it happens quite often when it does get to the 100-week moving average. And right now, the share price is well above the 100-week moving average. And that sort of makes sense. We think this company is overvalued. I think this company is overvalued. So if the share price does pull back by, say, we'll say about 20 to 30%, that's when you might see some value. And that's a good time to maybe buy some shares. So would I buy shares in this company if I do see the share price pull back? Maybe. Anyway, that's it for today's video. I was going to do one of your comments. I will do one. I'll do one, just one. Because this one's going to be quick. CJ Smythe 777 says, lift in Fonterra 2025 earnings guidance. Let's hope Synlait follows the upwards dairy trend taking place. Unfortunately, Fonterra has delisted off the ASX. So this sort of information moving forward from CJ Smythe is really appreciated, because I'm going to miss most of this because we don't get these announcements on the ASX anymore. So the very fact that Fonterra had an upgrade, let's see what the share price did on the NZX. Fonterra, NZX. Up 3.62%. So it's not a great increase. There we go. Fonterra increases forecast earnings by up to 25%. New Zealand's Fonterra lists earnings outlook on strong consumer operations, raises full-year earnings guidance. I sort of expected maybe a better performance than that. However, yeah, again, Fonterra is no longer on the ASX, but this could be good for Synlait, which I am trading right now. And since we're talking about Synlait, let's have a look at Synlait's chart. We'll have a look at the daily chart, because the weekly chart looks ugly. And it looks pretty good. A really good run up, and the share price has gone sideways, sort of consolidated. That's really good. Okay, that's all I have for today's ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.